Welcome to another episode of the Opportunity Podcast. I'm your host, Greg Alfring, the head of marketing over here at Empire Flippers. And today I am talking to Paul Lajoie, who wrote the Exit Plan book. We barely talked about that, though, to be honest, because Paul has a very interesting story. He has acquired 25 businesses over his career as an entrepreneur through acquisition, from flooring companies to oil and gas service companies, which is fascinating because at one point, you would think there's all these crazy differences between buying a digital business versus like a flooring company. But there's also a lot of crossovers. And there's actually one moment where Paul actually starts asking me questions, which was very, very fun. It was a really cool conversation. I think anyone out there that is looking to build a portfolio of acquisitions, this is the one for you. And we even talk about starting your own business, which Paul, I mentioned that, like, he failed three out of the four of the ones that he started, but he has a 93% success rate with buying businesses, which is weirdly very close to actual studies I have read about ETA versus building a business from scratch. So this was a super fun podcast. I think your guys are going to enjoy it and get a lot of value out of it. So I'll stop talking and I'll see you on the other side. All right. I got Paul Lajoie here with me, who has bought over 25 businesses. Paul, it is a pleasure to have you on to the podcast. I'm sure it's going to be pretty interesting for our audience to hear from such a prolific buyer. But why don't you introduce yourself, who you are, and where you are in the world at the moment?
Okay, 2 or 3 minutes. I'll give you a quick background. So, coming out of school, CPA, worked in Big Six accounting for about 2 or 3 years, and worked in corporate world in various roles in accounting, finance, that sort of stuff for about another 8. And then had a life change, getting ready to have our second kid. So we wanted to maybe replace my wife's income, et cetera. And actually, we bought a bigger business than what we anticipated. And I actually quit my job after about 6 months. And so we replaced both of our income. And that kind of started my journey down the entrepreneurship trail and bought another 20, 25 businesses over the next 25 years. I mean, that's kind of where we are now.
Wow, there's a casual extra 25 business acquisition there. Before we dive into all your knowledge here, what was the first business out of curiosity? Can you say?
It was a flooring company, like carpet
Okay.
hardwoods, and we actually still own it. So
Oh, really?
that's my
Wow.
baby. I don't think I'll ever get rid of it. I don't care if it starts losing money. I just feel like I got to keep it for some reason, and I like it actually. So I actually still work in that a little bit, and we do new construction, and so I got a couple customers that I still deal with, and get in my truck and go to job sites and measure and supervise installs and stuff like that. I actually still like it.
That's awesome. So you've owned that thing. Have you kept your whole portfolio at
No,
25 or have you sold
no,
off some?
no. I've sold off most. Some because I just didn't like the business that we bought and got of it, failure here or there. Started some from scratch as well. And those are my most unsuccessful, but that's the most risk, right? So the ones I start from scratch, super sexy, right? But those are where all my failures are just because it's such high risk, right? I mean, starting something from scratch, you don't even have a product, you don't have customers, you don't know when you're going to break even. But one of the ones that I did start is my most successful business. So there you go.
Well, it takes a few tries. It's so funny you said that. I was just literally talking to another friend of mine who was talking about buying a business is very risky versus starting from one. And like, I don't know, man. Like, you already got proven product market fit. You have the financials. You have customers coming in. Like, yes, like on paper, I guess it's more risky, but like 50% of businesses that people start from scratch are gone within the first year because they never even really figure out how to get their first customers a lot of the times.
My success rate on buying businesses is 92%. My success rate on starting one is 25.
Let's yearly check with the actual
Yeah,
stats.
so that's it. And that's on starting a business. 95% of them fail in 5 years.
Yeah, yeah.
Starting one.
There's almost nothing left by year 10 in terms of like the original cohort. So let's talk about that. So what is the difference of this? You have experience on both sides. What's the difference between buying a business and building them from scratch? Like, you've experienced both sides of the coin. For my audience out there listening in, which would you
Yeah, I mean, you
recommend?
kind of mentioned that already, and I'll go into more detail. Is the businesses that I'm buying, one of the biggest filters that I have is they have to be in business for at least 10 years. So that's my number one filter. And mainly because if it's been around for 10, it's most likely going to be around for another 10 because it's probably been through at least one business cycle. So it's
Yeah.
survived a
Yeah.
recession. And if it can survive a recession, most likely it's going to survive the next recession. Right. And just any changes in the industry and technology and all that sort of stuff, it's survived everything. So that's my number one filter. But it comes with customers, it comes with employees, it comes with policies and procedures in place and reviews, and just you're going to have money literally coming in day one.
Yeah.
Right. So it's a known quantity, right? Versus starting something from scratch. Again, super sexy, right? Oh, I started this one. This is my baby, right? And that's kind of cool. But it's like, when are you going to have money come in? Is it 12 months, 18, 24, 36? You don't know. You can guess, right? And then how do you price your product, right? And then you don't have any customers, you don't have any employees. All it is just for an unforeseeable future, it has money coming out of your pocket and none going in. And it's just super, super risky.
Yeah, I think people don't think about that opportunity cost at all. They see the sticker price of the business for sale, but they don't see the opportunity cost of the business you're starting from scratch, right? I think that is often unsung in the realm of entrepreneurship. You mentioned 10 years as kind of your starting base when looking to acquire a business. What are the other things you're doing to identify a good business? I mean, about 25, you must have all sorts of
Oh, a couple other
frameworks.
filters is customer concentration is super important as well. You know, probably no one customer more than 10% of your business. And that's kind of even stretching it. But also, too, with that said, there's multiples on when you're buying these businesses, right? So let's just say your net income's $1 million and your multiple's three, so you're buying it for 3 million, right? If you have one customer, maybe you're buying that at a 1.5 multiple because it has massive risk, right? Versus if I had 10,000 customers, none representing more than 1%, very little risk. So you're probably going to pay more for that company. You're probably paying a 4 multiple on it, right? Does that make sense?
Yeah.
So the market should adjust for those things. And same thing, if you've been in business for 30 years, your multiple's probably super high. Versus you've been in business for a year or two, your multiple is going to be lower because there's higher risk, right? But I'm more of, I want to buy a known quantity, even if I get to pay for it a little bit more. In the 3.5 or 4 multiple is just like, I don't want any risk associated with it.
You just said something I want to double click on because I think a lot of newbie buyers make this mistake because they'll see all of these like gurus or whatever talking about getting like negotiating the deal down to the lowest possible. But you just said you're like okay with even overpaying. And in my view, I feel it's buying a business is different than buying real estate. Like you make your money on how you buy the real estate, right? Versus a business, if you overpay a little bit, it's actually not that bad of a deal because you're still like exponentially able to grow it. What are your thoughts there? Do you think buyers get stuck on price too much?
They do get stuck on price. So when I tell people and educate people on negotiation, so first off, there's multiple points of negotiation. There's the point up front, right? Your letter of intent. They want 3 million and you offer 2.8. You hadn't even seen the financials or a small piece of the financials. You haven't done any due diligence. You don't know anything about the company. It's just give them a number that they're going to be happy with, right? Sellers, 99% of them get stuck on price. I want a number for some reason, and it could just be something stupid other than ego. I want $5 million. It's just a nice round figure. I've always wanted to sell something for 5 million, and that's my exit number, even though it's worth 4. Okay. So if I can make them happy and I give them that $5 million, well, one, I'm going to go through due diligence, and that's another point of negotiation, right? So you find something, oh, well, yeah, you have this one customer, you don't even have them under contract. It's just a handshake deal. I can't give you any money off of that. So you start negotiation, man. It's like, oh, your number one manager just left, right? Well, man. And now you're going to have to hire somebody at a higher salary because you had them under market and I'm the one on the hook for the higher salary. So now all of a sudden through due diligence, you're down to 4.5. But what I actually look at is more important is the terms of the deal. Okay. And what I mean by that is I'm going to give you your 5 million, which now you're super happy. Make sure you become friends with that seller. Right. So when you get in a negotiation, it's not confrontational. It's more of two friends talking.
Sure.
So a lot of conversations between you and him talking about hunting and sports and children and grandchildren and where do you like to vacation and all this sort of stuff. Now you're friends. So when those hard and fierce conversations start during due diligence, it's more of two friends having a conversation. I mean, it's more likely to become beneficial to both. But back to terms. So what I mean by that is I'm going to give you your 5 million. However, this is what I want. I want you to stay on for free for 3 years. Okay. And let's say he warrants $150,000 salary. So there's 450,000 of free stuff you just got. Right. I want you to do a owner carry at 30% at 4%. Market's 8. So now I just got 30% of the purchase price at a way below market value. And I want you to do a full standby for 1 year. Right. So no payments, no interest accruing, no nothing for 1 year. So it allows
Gotcha.
me to get in. And if there's a few things I didn't anticipate, right? Like, oh my gosh, I didn't know this. I was going to have to buy a new software package, which was 50 grand, and a truck just engine just blew out and it's going to cost me 20 grand to replace that engine and all that sort of stuff. So all those unexpected expenses that first 12 months, right? Now I'm not making any payments to the seller for a year, right? So where I've given him is 5, I kind of look at it as like, well, I really gave you 4.2. If you take the terms of the deal, I really paid you 4.2 and I wanted to buy it for 4. So everybody's happy, right? Does that make sense? So a lot of people don't think of the terms, but man, I just give them the price they want under most circumstances and negotiate the terms, and you're going to end up getting the price you want.
I 100% agree. I think the deal structure is where the most leverage exists. Like, if someone sells you $1 billion business, like, sure, I'll pay you $1 billion if the terms of $1 a year, right? Like,
Yeah.
whatever. I had some other questions, but since we're talking about deal structure, this is always like a really fun topic with business buyers. So in this example, you got the deal down to like 4.2 million, like either 30% at a 4% interest rate is like definitely possible. I've seen, like, we have a lot of businesses we've done at 0%, right? For a lot of digital businesses, it's very common. What other stuff do you do in terms of your deal structure? Like, how are you financing your deals? Is it cash heavy, or are you doing some other
Let's get into
interesting
the deal
things?
structure a little bit more because I want to drill down on the seller
Sure.
carry. So, because I'm a CPA, most sellers, even most business brokers, aren't educated in the space of selling and the taxation thereof, right? So, if I just wrote him a check for $5 million, he's going to have to pay taxes in 1 year on all $5 million of that. And that's obviously going to put him in a horrible tax bracket. Okay. And let's just say that's all ordinary income. He's paying 40% taxes. Okay. Versus if on the exact opposite of the flip, let's say he did 100% seller financing because I educated him along the way. So I was like, man, you're going to pay $2 million in taxes if you just cash out on this thing, right? How about if I show you a way that I can cut your taxes in half? What? How could you do that? Well, we're going to do 100% seller financing and know it's going to be 10 years at 4% or 5%. Now, $500,000 a year is going to be his income for 10 years because it's in essence an installment sale. So now what are the tax situation at 500,000 a year versus 5 million in 1 year? All of a sudden now he's paying a 25% average tax rate over 10 years, right?
Right.
And the other thing too is if it's an elderly person that's 65, well, what are you going to do with your money? Well, I'm 65. I can't put it in the stock market. So I got to retire on this money. So I'm probably just going to put it in some type of government bond. And what's a 10-year government bond paying right now?
Right.
4%, 3%. So now I'm like, now I put in his head is like, well, all I want is 4%. Well, now that just drives you straight into that negotiation. Like, well, I'll give you 4%. Right. So that's how you negotiate on a seller carry. Right. And that's how it just opens up the eyes of, well, I know, want my money now. Well, do you? And this is what are you going to do with your money? Right. So just kind of walk through there on the seller carry, and that'll help you get there very easily.
This is something I've had buyers do, and a lot of my sellers, and maybe it's because what we sell is mostly digital businesses like e-commerce stores and marketing agencies. Our entrepreneurs tend to be like not part of the silver tsunami that's happening, right? Of selling their businesses. But a lot of buyers, they really struggle with that seller finance and making the seller really see. And I think maybe part of it is a lot of our businesses tend to have bigger profit margins. For example, one of my buddies, he's cashing in 130 grand a month in profit for it that he just pays himself, basically. So like, a lot of these sellers don't want to do necessarily these 100% seller finance deals. What's your advice there? Like, and also, have you done like 100% seller finance
No,
deals?
never have.
Okay.
There's still a hope out there before I die.
One day it's going
I'm
to
one of them. Just yeah,
happen.
I feel like that's my unicorn that I'm chasing.
Paul, you're going to get that seller from this podcast.
You're out there without a doubt. Yeah, let's mark the date and time on this. No, I haven't. But I mean, realistic is 2030. I've done a 50 before.
Yeah.
And the more the seller finance, the more comfortable I am because if everything hits the fan, right, then that seller is going to step in and help you fix it probably because they got 200, 300, 400, $500,000 or $1 million on the line. So they're going to step in because that company goes bankrupt. Like you lost your biggest customer and they were 30% of the business. Well, the seller's personal friends with that guy. So he's going to step back in, right?
Right.
Because he's got a lot of money at risk. So the higher the seller finance, just the more comfortable I am getting into the situation. Yep.
I find that is a common trait with a lot of my friends who are prolific buyers. Like they won't even look at a deal unless there's at least 20% seller finance. Like for them, it's kind of a red flag when the seller doesn't do it because, like, oh, dude, you're not very confident in your business. But of course, the
Yep.
seller would say, well, I don't know you. I'm confident in the business. I'm not confident in the buyer, right? So there's always a little bit of that friction. But yeah, I'd say 20, 30% seller financing is pretty normal for our end too. I think the highest we've been was 60 or maybe 65%, but that was very much an outlier. So what else does your deal stack look like?
Are you asking what type of other businesses I own?
I want to get there too, but I mean, like in your acquisition, so there's a seller finance portion. Like, are you doing all cash? Or are you using other kind of leverage?
Oh, yeah, I'm doing everything. So SBA loans, and I know you got $5 million limits. And then what do you have on the real estate portion of SBA right now?
I think it's 25 million still. I think they might have changed that.
Well, it's 25 years on the real estate. I don't know what the value is. On the 7A, on the actual acquisition of the business, it's 5. But I don't real estate separate. I don't know what the value is on the total. But anyway, so and I try to buy the businesses as well. So SBA, I get investors, smaller ones I'll pay cash, but I don't like paying cash just because I like to leverage my money. Right.
Yeah, it makes sense.
But if it's super small and let's say it's not loanable and the seller doesn't want to carry, then I might be in a situation to pay cash on some of those. But most of them are financed through SBA investors and funds that I'm associated with and things like that. So I'm a part of a mastermind group called Go Abundance, and there's 1,000 of us and very wealthy men all across the United States, and they're always looking to park money. So I almost do syndication in business like you used to do in real estate, where you just kind of act as the general partner and you get 20% of the deal for putting it together and then a management fee and stuff like that. And then there's profit splits. So that's coming into play big time in small business because I personally think real estate, as we have known it over the last 30 years, is done, is dead, and will never come back. Right. I mean, those days in, 10 years ago or even 5 years ago, that used to be able to buy something for 2 million and flip it in 3 years and cash out for 4 million.
Oh yeah.
Those are done. Right. And I own 4 pieces of commercial real estate myself, but I bought it way back when. No way does that pencil now. No way,
Yeah.
unless you want to make 8% return on your money. That's a real estate transaction now. So I bring that up because a lot of people that were doing syndications in real estate, they're kind of coming over into small business and trying to do the same thing. Those are a little bit bigger purchases, but I got access to things like that. And I've done a couple syndication deals on a couple bigger ones.
I don't know that much about it. But I have heard rumors of those syndicators coming over to like the more SMB broker M&A side, and like they'll be talking like they're still trying to sell commercial real estate with like the capex or whatever, like like that. This is a marketing agency.
Yeah.
Like some funny loss in translation stuff that could happen. But that makes sense. When it comes to doing the actual due diligence on these businesses, what are you looking for? Like, what are the big hairy red flags, and what are the green flags? Like, yes, this looks like a great deal to look further into.
Man, a lot of people are always underinsured. So that is super scary. I mean, hell, I looked at one that had $10,000 worth of insurance. And after I started asking the questions, I figured they should have had about 100,000 in insurance. This was a company that was making 350,000 a year. So if I purchase that, I'm going in and like a third of my income is gone. And actually, that same company, this is another massive red flag because all of this stuff will catch up with you, right? A lot of businesses have 1099 contractors or independent contractors or whatever you want to call them, and they should be W-2. They should be employees. And I understand some circumstances like, well, we've had it for 10 years. Well, it's a matter of time that you get audited and they're going to hit you and they're going to go back as far as they possibly can to get that money. And by the way, that's not dischargeable in bankruptcy. That will come after you personally if you didn't account and pay for this properly. So that's a massive red flag, right? I mean, go to irs.gov.
Before we move on to the next one, that one would be pretty relevant to a lot of our audience. So a lot of our audience are digital entrepreneurs, right? So they have contractors all around the world that have been working for them for years. So talk to me a bit about the W-2 versus the contractor situation.
Well, the digital space probably may be okay. But if you go to irs.gov, there's really like 3 or 4 or 5 questions. Do you have a W-2 or do you have 1099? Right? One, can they work for other people? And do they work for other people? That's one of the biggest ones, right? Second one is, do they have all their own tools, right? And their own truck and all that sort of stuff, right? So if I'm a plumbing contractor and I've got this guy and I bill him out or pay him as a 1099, is that his own van? Those are all of his own $50,000 worth of tools in that van? If the answer is yes, then he's probably 1099, right? But again, does he work for other people? Do you manage him? Or can he show up and do whatever he wants? Or does like, hey, do you give that person standard operating procedures? This is how you do plumbing work. This. Oh, well, now you're managing him. That's a W-2, right?
Interesting.
Those are the 3 biggest ones. Do they have their own tools? Do they actively work for other people, right? If you have a 1099 and they don't work for anybody else but you, that's a W-2. It just is. Right. And then do you manage their day-to-day operations and things like that? So that is big because if you got $1 million worth of payroll and they're all 1099 and you have to convert them over to W-2, and you don't have to, but again, you're going to get bipped on. It's going to be bad. This is how people go out of business when you get audited. Right. Now you're paying the other side of payroll taxes. So that's going to cost you another $80,000 a year when you convert them from 1099 to W-2. Right. So that's super, super, super important.
I imagine that's a huge thing in terms of due diligence, especially maybe before we go further, maybe we should describe a bit of your portfolio because it sounds like you are mostly dealing with what we would call an offline business or a more traditional brick and mortar Main Street kind of business. So maybe describe a bit about your portfolio.
So a lot of home services, I love that space because it's not going to get replaced by AI in any form or fashion, right? So the flooring company, a fence company, a lighting store, I own a couple oil and gas companies. What else do I got right now? Obviously, my small business consultancy company, BizByPro, that I help other people kind of do what I've done. Let's see what else. I got an LOI signed on a HVAC company right now. And
the darling of private equity right there.
I know. They're hard to find. I found a good one.
I bet they're hard to find.
It's at a 4 multiple. So those are hard to find, without a doubt. And the other space I love right now that I'm trying to get into, and I've been talking to this one group out of Arkansas for about 3 months right now, is light manufacturing.
Interesting.
Just kind of you got a little niche and you're making a few things and you got a bunch of customers, and I don't see that changing or getting affected in any form or fashion. So I love that space, and nobody's talking about that because it's not very sexy at all. But I feel like I'm going to buy 3 or 4 in that space in the next 24 months.
Yeah, I agree with you. I think unsexy businesses are the actual sexy business. I have a friend here. So I'm in Vietnam. I do the whole digital nomad thing. And I have a friend, he's a fellow American, but there was this factory owner that he met. And the factory owner just made these plastics, but there was all this like plastic storage type of stuff and all this waste material. And my friend's like, hey, we could take this like plastic waste material, reuse it, and we can like become the number one storage or containers for cannabis, because cannabis at the time was just getting legal in America, right? The Vietnamese guys like, well, it's not legal here. Like, well, we don't pack it here. We send it over. Or we just send the containers over. And it became this massive business, just like waste plastic that they repurposed to be sold to these different cannabis distributors at the time when no one would do business with them, right? Because it was
Yeah.
still like just coming out of the gray market. Everything was a bit wild, wild west, but they were able to build up a pretty massive opportunity with a very obscure thing, which I always love hearing about. So I'm with
Yeah.
you.
Yeah. I got a question for you because you're more in the
Sure.
digital space. And I felt like I just, even before this phone call, I'm like, man, maybe I need to start looking into the digital space a little bit
Come
more.
on over, Paul.
So I am kind of curious because what scares me going into this, and it talked me off the ledge here, is with technology and AI changing so fast that how do I protect myself? If I bought a SaaS company and I got an SBA note on that, well, I got a pucker factor for 10 years and
Yeah.
technology is changing so fast. I mean, how do I strap myself to a 10-year loan on what's going on in technology right now, right? Or even in e-commerce or, just whatever in that space. Give me your thoughts on that right now because I'm very curious.
Yeah, so like we've done deals with SBA loans. I think doing an SBA loan with a digital business, not all of them, by the way, this is not a blanket statement for all of them, but I think doing like an SBA loan for digital business is filled with more risk because of what you just said.
Okay.
And the other thing, like, so your buy box, right? 10 years, there's very few online businesses that are 10 years old. I mean, that's back to 2010 when people really just started figuring out like social
Right.
media wasn't even like that mainstream yet. That was like, I guess it was 2015. 10 years. I'm I'm getting older, but I still think 10 years ago was 2010. But you know what I mean. Like I think the oldest business we've sold was like 20 years, which is like ancient in digital
Wow.
time. Like absolutely ancient dinosaur business. The buyer made a lot of good money because it was also not updated like it had been updated in 20 years. So I would say your concerns are there, but the arbitrage you're playing with a digital business is like while there is more risk, there's also a lot more reward. So you can scale much crazier with these businesses. So for example, we had a guy bought a $180,000 Amazon FBA business from us. And then 22 months later is now back with us. I think it's like a 1.1, $1.2 million business now that he's selling. You would be hard pressed to be able to do that with a lot of more, traditional mainstream. Not It's not impossible, obviously. You'd be hard
Right.
pressed to do that with Main Street businesses just because you're so geo locked, right? And often those businesses are a lot more capital intensive, all that kind of good stuff. So I always tell people if you're going to buy a digital business, like one is age. Usually I would start at least 5 years in the digital age. Most businesses we sell between 3 to 5 years. 5 years, make sure it has multiple traffic sources. That's the other big gotcha in the digital space. Like Amazon affiliate sites are all SEO. They got wrecked pretty hard with Google and AI, right? And then Amazon FBA, you're kind of beholden to Amazon. So you really want multiple traffic channels. Just like you were talking about customer concentration, that also exists if you're buying a service business. And then ideally, you can make money from multiple different sources, basically. You have multiple different upsells, and your profit margin is good enough that allows you to go to these different channels. With SaaS, that's an interesting one. So I just finished writing my industry report, which is something I do, though I haven't done in the last 2 years. I tend to do it like once every year about every business we sold. And my prediction is micro SaaS will be threatened by AI more as the AI vibe coding happens. But businesses like e-commerce and marketing agencies in particular, I think are going to have a bit of a renaissance here because while technology does change really, really quickly, e-commerce and marketing agencies in particular, they can just adopt the new technology. Like the new Claude comes out, it's better than ChatGPT. Like, all right, it's a bit of a pain to switch the APIs, but it's like not the end of the world. Versus if you're the SaaS startup and the AI just does what you do way better or way cheaper as a one-time payment, then you're in a much more threatened position in my
Yeah.
view.
Well, do you feel in the digital space that the multiples are lower than traditional brick and mortars? Like we're talking probably 3.5 is average in the brick and mortar. You getting like, are you selling at twos or 2.5s?
Yeah. So if you had asked me that question between 2020 and 2022, I'd say our multiples were way higher. Like we sold Amazon FBA businesses at like SaaS multiples. It was nuts. But
Wow.
that was a classic, like a lot of investors are about to lose money with this private equity firms coming in here, right? Like it was one of those kind of situations. But
Yeah.
historically, from 2016 to 2020, our multiples were way lower than Main Street. Like we're talking like 1.2, 1.8x.
Okay.
Nowadays, I would say is a little bit more in parity, like between 2.5 to 3.5 would be
Okay.
probably the average. And most of them will sell between like 2.5 to 2.9, unless it's a bigger business. The bigger the business it is, obviously the bigger multiple is going to get. Once it hits seven figures, like you can bump that multiple up a bit more to like between that 3 to 4x now, depending on the business model, but that's typical. Usually those are going to be e-commerce and agencies.
So does if you're getting in the bigger one, so we talked about SBA maybe not getting in this space. Does SBA not like this space at all?
Yes and no. So like it's SBA will do it. Like we've done SBA deals. It just takes a long time. And the thing with on the smaller end, so any business valued at less than $1 million, the SBA can be a little bit of a time suck for the seller because you have all these affluent younger buyers are coming in just paying cash or they got this investment from this fund or whatever. So they beat out the SBA buyer just their speed, right?
Right.
But there are some business models SBA I would think they don't like. I always assume that they don't like, though I've heard stories of people doing them, like an SBA loan on an affiliate site, for example, which I think is a terrible idea. Don't recommend anyone in my audience to do that. But I know of one case where that did happen, not with us, with a different broker. But SaaS, definitely SBA fundable. E-commerce, absolutely. Agencies, a little bit trickier, but yeah, it can be done as well.
Okay. Interesting. Very good. Now that's good information. I'm always looking for the next thing on my side.
Come on over, Paul. Listen, we
Without a
will
doubt.
make a commission for me for my KPIs by the end of this podcast, my friend. Let me
Well,
hard
definitely.
sell you.
You got my email address. Start sending me stuff without a
That's true.
doubt. It's all about diversification. Somebody asked me in one of my chats this morning was, what would I rather do? Buy one business and grow it or buy multiple? And it's funny because I know the answer because I think about it myself every day and I've answered it a few times is without a doubt buy multiple. Just because you just
Really?
don't. Yeah, without a doubt. And just diversify, right? I mean, it's just I got oil and gas, I got home services, and I did some direct marketing stuff and obviously on real estate. And that's why I kind of was thinking this morning about the digital space because I don't own anything in that space. And I feel like I just would like it from a diversification. So it does kind of slow me down where instead of buying one and trying to double it in 3 years, you're still just got it's no different than in stock as far as I'm concerned, right? If you're going to make a ton of money in stock, you invested in one or two stocks and hope it, doubles, right?
Yeah.
But it's also too, you buy those one or two stocks and they could go down to zero. It could go double, but it could go down to zero. But if I own 100 stocks, you're not going to go to zero, right? But you're going to hamstring yourself to 8 or 10% growth. So same thing here is, yeah, maybe if I focus just on this and maybe my flooring company could be worth $20 million now if that was the one I didn't buy any other businesses. But also too, if we remember for your older audience here, if you remember the housing crash in 07, 08, I probably, if I didn't own other businesses that kind of subsidized the flooring business, because I mean, construction went down 50% overnight.
No. No.
50% in some places in Detroit and Phoenix and Las Vegas, it was 70 or 80%. And it didn't come back for 3 years. So if I didn't own oil and gas and some other businesses that were able to subsidize the flooring would have gone bankrupt. So if I would have put all of my eggs in the flooring basket, I might be working for somebody else right now. Right.
Yeah. Yeah.
So I definitely like the diversification play without a doubt.
So I tend to agree with you on this, but I'm curious on your thoughts on this because you've done it. So I've had friends that would come into my space and they'll try to diversify, like buy an e-commerce store and buy a SaaS business, buy an affiliate site, and they do it all at once. And then they realize, well, shit, I just bought 11 different business models and I only know one sort of well because there's the whole, like, it's not just like it sucks. You actually have to run them, right? So I usually tell this to my sellers because once they get their big payday, I tell them, hey, guess what you can do now? You can buy a business. You got the liquidity, right? Come on back. So I tell them about the asset flywheel, this whole idea of buying a business after you sell a business, right? And I always tell them you should buy a business that's like a smaller version of what you just sold. Like it doesn't have to be the same niche or anything like that, but of a similar business model. Like you bought a lot of home services, so you might end up agreeing with me because you already kind of know the roadmap of how to get to the next level because you just did it. So what are your thoughts there? Do you think that's a smart way to go into diversification? Would you recommend a different way?
Now I love it. I mean, the first thing that came to my mind is leveraging your money. So you sold a business for 1 million, and let's take taxes out of the situation. You just pocketed $1 million, and then you could go buy the same size company for that you just sold for 100 grand and still have $900,000 left over, right? And get a $900,000 SBA note, right? And then since you've already done it, and it's buy the same size business and grow this thing again and exit in a few years, right? So I like the leverage play without a doubt. But I would also take that $900,000 and then go buy a piece of real estate. I know we don't like real estate, but it's still a stable play.
Yeah, yeah.
Or go buy a second business, right? I know we don't want you to go buy 5 or 10, like you said. Some of your buy a second one, right?
I bring up the 11 business models. That was literally what happened. My friend bought 11 different business models. Didn't know how to run any of it. It was a mess, man. It was a mess.
Yeah.
Yeah, I agree with you.
I highly encourage people to stay involved in companies, right? Because there's a lot of people out there in our space, in both of our spaces, that sell the rainbows and unicorns of no money down and 100% seller financing and absentee ownership and all this sort of stuff. Man, you are going to get in a lot of trouble. A lot of absentee ownership. Are you kidding me? I mean, when I hear absentee ownership is you show up once a month for an hour. Boy, not just one, but if you get 15 employees, 10 of them are stealing from you. I promise you. And it may be in a small number or something like that. They're stealing $50 or $100, but what happens with stealing 50 is they keep getting away with it. Guess what happens in 12 months? Now they're stealing 5,000 or 10,000 a year.
Yeah.
And they'll end up getting caught, but you won't get any of that money back. But absentee ownership is 100% equals theft, without a doubt. You have to manage your companies at least 5 or 10 hours a week.
We've never done absentee ownership. We have done lifestyle businesses, and usually the seller, we represent them. So we try to get them to hey, you don't work 1 hour a week. Let's be real. You're working 5 hours. It's still not a lot. It's fine. But yeah, the absentee stuff, I've never had that experience with our marketplace. I do see it on marketplaces like Biz Buy Sell, which always absentee, I feel like absentee, turnkey system. These are all the words of this is a business I probably shouldn't buy.
Yeah.
But just because it feels a little too markety to me. With the 0% down deals, I think the big problem with that, I know a few of those gurus and I consider them friends. I think the big problem with that a lot of people listen to them is they don't realize they're not saying zero money down. They're saying zero money out of pocket. The seller's still getting paid a ton. They're just doing crazy creative financing, which in of itself, I think a lot of newbie buyers probably shouldn't do because it's pretty advanced. It could really lead you to a rough spot. But yeah.
I completely agree. What you can do if you buy business number one today, what you're doing 5 years from now is something completely different. So I'd even throw potentially an absentee ownership out there in 5 years, but don't do that. You're number one. And in the creative finance or syndications, no, don't bring in outside people's money and all that sort of stuff. It's tough. Cut your teeth on number one and make some mistakes, and then start getting a little bit more creative on business number 3. Or, don't start a business now too. Get a couple sources of income coming in from 2 businesses, and then 5 years from now, start one from scratch. Then you can absorb that loss that it would be inevitable, right? Because it's going to happen, right?
Right.
I've always wanted to own a restaurant. I mean, maybe one day before I die, I will. And I got, $5 million in my bank account burning a hole in my pocket. But God, I mean, stay away from the risky ones too, right?
Well, if you only have 5 years left, don't do a restaurant, do a bar. That will get you through your 5 million even faster.
That is true. Yeah. Or a restaurant during the day that turns into a bar at night, even worse.
There you go. Combine both.
Exactly.
When you bought your first business, did you have a lot of fear going into it? Talk to me a bit about the mindset of your first business.
No, it's funny. I feel like I have a lot more because I was stupid and didn't know. Right. I mean, when you that first business, you don't know what you're getting into. I mean, that's kind of felt like I was. And I was confident because of me being a CPA and understanding numbers and taxation and all that sort of stuff. So, and I went into business with my brother, Bob, too, who is highly intelligent. So I kind of felt comfortable that there was 2 of us and that we knew the numbers. And it was an existing business that had been there 20 years. And I really liked the seller. and he stayed on for 90 days, and they had great clients that had been there forever. So no, I wasn't scared at all, but I should have been. Right. I didn't plan accordingly. And it's a new buyer thinks they need to know these 20 things because they don't know about the other 200 they don't know about. Right.
Yeah.
They really needed to know 220 things, but they knew 20 because they didn't know about the other 200. Like, for example, the first one, you would think that me being a CPA, I'd be good on my numbers. We didn't get enough working capital.
Oh no.
So it's like,
I literally, right before this podcast, I shot a video about a newbie buyer mistakes, and one of them was not thinking about working capital. So I'm glad you're like vindicating
we
me.
thought about it. We just thought about it wrong, right? Because it's an easy calculation. A minus B equals C, right? I mean, the money coming in minus the money going out this is how much you need, and then throw a little fluff in there, right? For a truck that breaks down or whatever. And, we're 60 days in and we got like $27 in our checking account.
Mm.
And we had to inject additional capital into the business, which is good. If you got $100,000 to your name, can you only use 80 of it when you're buying a business and keep 20 just in case for stuff like that? And then ask for working capital. They'll roll it into the loan. And if you think you need 100, ask for 200.
Yeah.
Right.
My advice is always get a little bit more than you think you need, because you'll probably need even more than that.
Exactly. But I mean, that's, what is it? Of the businesses that fail, 80% of them fail because of lack of cash and understanding cash flow management, right? So, the old adage, if you can grow too fast, without a doubt, you can grow too fast, right? Especially if you don't have your head on straight that like, okay, how do I finance that growth, right? You just like, oh, let's double the company. Well, no, you got to think about that. That's expensive. How you financing receivables and new trucks and new employees, and employees are going to cost you money from day one, but they're not producing any benefit for 60, 90 days or 100 days, right? So you got to walk through this very slowly, and it's good to have somebody hold your hand, right? So I always seek outside counsel, right? Seek out somebody that's done it before, and that'll cost you some money. But it's like, man, if you are buying business number one and you got $100,000 to your name, you're going to try to do that by yourself without help? No, don't do it. It's just that business number one, if you fail, that's hard to recover from. The SBA note, you think the federal government's your friend, they're not. They'll come take your house. And you married and you lose your house, you're going to lose your marriage, and it's going to create a lot of problems for the rest of your life. So seek out counsel without a doubt.
Well, I'm glad you have now scared all my audience. So I hope you're going to buy a business from me so I can get some sort of sell out of it.
Well, you are, and I'm not just saying this just to throw this out there. You know what you're doing, right? So having a business broker, somebody that kind of understands the nuances of everything, is very helpful, because I feel like a bunch of business brokers just kind of throw stuff at the wall and see what sticks, and they're not a consultant through there. Right.
So the problem I have with business brokers is kind of a different issue, but similar to the gurus, is like most business brokers are real estate agents, right? Or they're cosplaying as a business broker. Yep. And they're great salespeople, but they don't understand how to buy a business or grow a business or whatever, right? They know the mechanics of it and they're good at selling you on it, just like real estate agents, or they often hate real estate investors, so they don't understand what the investor like needs, right? So I would always tell, and I'm curious if you think this too, I would always tell buyers, even though you hear all these people saying like, oh, the best deals are off market, I would always recommend go with a reputable broker, because there's so much you don't know. And there's tons of deal flow like down the road, but you should just do like a vanilla bog standard deal for your first deal just to learn. Like, what are your thoughts there?
Well, without a doubt, yes. Get in with brokers and think about this as a 10-year play. If you're just a newbie coming into this, think about 10 years. Don't think about the next 12. So you're creating relationships now that are going to be beneficial 10 years down the road. And what I mean by that is seek out the good brokers. Let's say there's 20 of them, okay, that specialize in, let's just say they specialize in home service. Seek out their friendship, right? And show them that you're a real buyer, proof of funds, all that sort of stuff. And then after 2 or 3 years, you buy one business from them. Guess what happens when they get the next good home service one? They're going to do a pre-market with you. They're going to give you first look for 7 days before they actually list it for sale. I have several relationships like that. And again, they weren't built overnight, But look at the long-term play here, trying to create generational wealth, right? So go buy business number one, and 25 years from now, you'll be like me and you'll own 25 of them. But
Yeah.
I got there because of the relationships I created a long time ago that are giving me benefit now. So make sure you understand that this is a long-term play. It's just not business number one. It's business number 10, number 20, and how to get there. So yeah. And then make sure you have your ducks in a row, right? Make sure you show them that you are a serious buyer. Don't just like, hey, I like listing number 7 is your email. Can you send me the NDA? Well, no, there's 20 other people looking at it. Why would I pick you, or why would I put you in the front of the line? Well, no, because you sent some type of resume, not a resume, but something, tell them about yourself. Go ahead and send your personal financial statement, maybe an SBA pre-qualification letter. Send them your buy box that's already done up really nice, right? And a proof of funds too. So you send those 4 or 5 things, and they're like, "Well, man, this guy's cool, and oh my God, he's got 500 grand or 100 grand in the bank."
Broker's dream, a broker's
he's a
dream,
buyer, right? So there's so many tire kickers out there that don't know what it takes to do something, or they're being influenced by the unicorn promoters out there of no money down deals and absentee ownership, and they think this is going to be easy.
Oh.
You're having to deal with all those people. Oh, you got any money? No, I don't have any money. What do you mean? No,
I thought you were going to pay me to take over the business. That's what the course told me.
So if you provide benefit like that up front, then they're going to respond to you, right? And then if this deal doesn't work, they already know you. Get them on the email list, right? So email them once a month. Hey, Steve, what do you got coming up? You got any new listings you're working on? And they're like, yeah, I'm working on a plumbing company. It's not listed yet, but man, I'll give you a first look at it. That sort of stuff. Take them out to lunch, do whatever if they're in your local area. So you got to work your network as well. In fact, I'll even say this. There's 2 deals I'm working right now, plumbing company and an HVAC company, that are my personal plumbers and HVACs. So I've gotten to know the seller over the last 3 or 4 or 5 years. So this is talking about a long-term play, and asked both of them about 12 months ago, when are you retiring? Well, probably the next 2 or 3 years, right? And I said, I want to buy your company. And they're like, what? Like, yeah, just bring it to me. We'll work out the deals, all that sort of stuff. So I go to lunch with each of those guys about once every 3 months. And I promise you, I will buy both of their companies.
Oh, yeah. I mean, it's all about the relationship at the end.
Long-term play.
I would say, and I'm sure you'll agree with me on this. If not, I'd be surprised to hear your answer as to why not. But I would go a step further, not just build a relationship with brokers and the entrepreneurs you're looking to buy, but financiers as well, like different lenders, credit unions, all this kind of stuff. Because it's one thing to fill out like the automated underwriting form, but the personal relationship opens up way more doors to actually get something done. So yeah, I agree with what you're saying.
Yeah. And the network on the financing too. Let people know what you're doing, right? Because there's a lot of people with literally cash in their pocket that isn't earning anything. So they're looking for a place to park it, right? So if that happens to be a friend of yours or a family member or something like that, or somebody in your network or your church or something like that, now all of a sudden they'll put forth that $100,000 down payment. So you do have no money out of pocket, right? And you're giving them maybe 20% of the equity for the 10% down payment, but you just bought a business, you own 80% of it, and you don't have any money out of pocket, right?
And now you can start your course and YouTube channel. You've made it.
Yeah, exactly.
Yeah. So this is the pipeline.
Yeah, exactly.
We're coming up towards the end of the podcast, and we haven't even talked about your book, Paul. So I do want to ask you at least one question about that. So your book, The Exit, your focus is on preparing.
Exit plan. There it is in the background right there.
Yeah.
The exit plan.
The exit plan, preparing for a sell. Talk to me a bit about the book.
It's preparing for a buy.
For a buy. Oh, okay.
For a buy. So you're exiting your W-2.
Gotcha. Yeah. So walk me through the book.
It's super easy read. And I give it away for free on Audible, by the way. So if anybody wants to reach out to me, just paul@bizbuypro.com. I'll just send you a free link to the audiobook. So really, it's 4 hours, 20 minutes on Audible. So it's super easy listen if you want to read it. It's on Amazon. It's just literally my journey over the last 25 years. We talk about, kind of my background in that first business, and then kind of how I just kind of scaled and bought more. But it really talks about the 10,000 mistakes that I made over the last 25 years. And just like we talk about my working capital or lack of working capital on business number one, it's just like I go through all of those things. It took me about 10 years to become comfortable with this process on how to value businesses and working terms instead of purchase price and working capital and how to read P&Ls and the red flags. And one of the most important things is tax returns. You look at the P&Ls and the balance sheets, but there's a lot of good stuff on tax returns that people don't know about that verifies the business, right? If it's made $1 million a year, right, that's going to flow through to your equity, right? Because you close out the books and you're going to have $1 million of equity added to your equity section. There's the balance sheet portion on the tax return, right? So there's just a bunch of things that I've learned over the last 10 years. And it's like, read that book and it's like, now you're already 9.5 years down that learning curve because I just told you all the shit that I've learned.
Don't do what Paul did here.
Don't do all of this stupid shit that I've done, right? So it's worth its weight in gold, without a doubt. So really, I'm super happy that I wrote the book. I've always wanted to write one. So I finally, it was probably a year ago I started on that. It took me about 6 months. It was published last June. So it's a good read, without a doubt. If you want to get in this space and in whatever industry you wanted to buy, it's a good read.
Yeah, we'll put the links in the show notes for anyone who wants to check it out for sure. We're coming up on time for the podcast. I only have one question I really want to ask you. I've been looking for the right time to insert it because I know my audience is going to be mad if I don't ask you it. So with 25 businesses, how did you manage it all? Because a lot of entrepreneurs right now are thinking like, 25, I can barely manage one. What's going on here? So walk me through the process of the actual management.
Well, I didn't own them all at the same time. Without
fair.
So I think probably the most that I've ever owned in some form or fashion is maybe 6 or 7 or 8.
Okay.
And I didn't own all of them individually. Probably 5, 6, 7 of them were individuals. A lot of them were partnerships. Some were as little I was 20% owner. And then a lot of them I was 50-50 owners on a bunch. Most of them are 50-50 owners with another partner. And a lot of like the 50-50s, I was more the silent partner, where I would work at 5 hours a week, kind of doing a little bit of the accounting, taxation, insurance work behind the scenes, where the other one was the operator, right? So I've never owned anything kind of where at least one of my partners wasn't the owner operator. So I've never gotten to the situation where I might be more absentee ownership because I only own 50% or 30%, but the business itself was never run absentee ownership.
There's this Paul Lajoie guy that says, be careful of the absentee people. No, that's cool. That makes sense. Like, you focus on your skill, which is the accounting stuff.
Yeah.
Like a lot of my audience, they're marketers. So depending on the marketing you're doing, you could replicate that across a bunch of different business models too.
That is a good point. One last point is understand what you're good at and hire for the whole.
Yeah.
Right. Yeah. And that's an ego thing. Is look in the mirror. What am I good at? I'm good at these 5 things. Well, great. We'll do those 5 things. These other 20 things that you suck at, we'll hire somebody. Yeah. Or go into partnership with somebody that have those skills, right?
Right. That makes total sense. The final question here, what is the best professional advice you've ever gotten, Paul?
Best professional advice. Wow. Should have asked me this beforehand so I would think about it for a second. Best professional advice. Probably don't do it alone.
Don't do it alone.
Yep. Don't do it alone. In anything, don't do it alone. Right? I mean, even if you're buying a stock, I mean, just do research, right? Understand what you're doing. Buying a business, don't do it alone, right? Go into partnership with somebody or seek consultants to help you out, that sort of stuff.
Well, Paul, I think that's very wise. I am disappointed that it wasn't my advice to buy a business for me from earlier on. So my KPIs are going to suffer from this. But I respect the decision.
That's the close second.
Close second. All right, yeah. I'll take it, man.
You would ask me 2 things.
Then, like, I could include both. Where should we send people if someone wants to reach out to you and pick your brain and learn more about you? Where's a good place for them to find you? You're
at paul@bizbypro.com is my personal email address, and I'll respond to it without a doubt. I mean, you can text me. It's me. I'm open book and I'm open access. Phone number is 214-207-8724. Reach out to me, send me a text. And then the website is bizbypro.com.
Oh, Paul, what have you done giving your phone number? There's going to be so many SEO agencies about to call you.
Oh, that's good. I don't care.
Perfect.
I love all that stuff, right? It's just, I'm here to help people out. I mean, it's just, I'm fine where I am in life. And I feel like my next 10 years journey is me just paying it forward and helping other people out.
Well, that's great, man. Well, thank you so much for coming on. It was a pleasure talking to you, Paul. Like, there's a bunch of other questions I could ask. I'm sure we could do like a 2, 3 parter down the road or something. But yeah, man, it was an absolute pleasure. I think my audience could get a lot of value out of this.
Sure. Awesome. Thanks for having me, Greg.
Ah, thank you. There you have it. I hope you enjoyed it. I hope it got you inspired at all the different things that are happening in this industry. And of course, if you just want to buy a highly profitable business, you can always go to empireflippers.com/marketplace, or maybe you want to make an exit of your highly profitable business, and you could go to empireflippers.com/sell your site. I've been your host, Greg. If you enjoyed this episode, make sure you leave a review, give us a like, a follow, share it across social media. Talk to you all soon. See you on the next episode.